Hello, hello, hello. Mic test, mic test, mic test. Hello, hello, hello. Mic test, mic test, mic test. Hello, guys, and welcome to our edition of the Trading Opportunities webinar, another one of our weekly editions. Today we are at the 158th edition. Let me give you a very, very quick rundown of how we do things before we actually proceed with the actual content. Before that, let me just take some. Just give me a moment before we get started. So first of all, the last public webinar we conducted was, I think, on 21st of March. And the next one was a private webinar, basically. So that's why we had a, what do you call, a break in the middle. So, all right, let's get very quickly started with a very quick introduction. And of course, thank you for the confirmation, Manuel. And do tell me if the screen share is also working fine. Joe, hello. It was a hectic week, definitely. Hope you are also doing well. All right, so first of all, as I said, if I haven't already, my name is Nirav. I am the admin owner of this website and YouTube channel, and we are conducting this weekly webinar series called Trading Opportunities. Today, we are conducting the 158th edition of this webinar. Excuse me. And so far, we have conducted 157 webinars. Within the last 156, we have captured a total of 391 trades. What happened in the 157th? Probably we'll check, probably not, because we had an intermittent private webinar, and probably we would have covered whatever happened in that webinar over there. So I do have to say that these numbers 391 also were good enough when we were conducting them publicly, because I cannot count the private webinars outcomes, although I generally prefer not to, because this is a public record, of course. Anyways, we'll see how things are going in crude oil, gold, S&P 500, Nifty 50, sorry, not Nifty 50, BTC, and of course our currency pair Euro USD. Lot of movement on crude. Excuse me. Lot of movement on crude oil, lot of movement on S&P, and overall exceptionally good trading week. And as a matter of fact, I had one of the biggest wins in last few months today itself, and it was a scalp trade on crude oil. We'll have a very quick look at that as well. So exceptional week, very hectic week as well, and very tiresome for me personally as well. Anyways, so that's the kind of thing we want. Weeks like this is what we live for, anyways, for traders from a trading perspective. I mean, so let's get started with the remaining part of the introduction. I also have a book. You can check it out here. It's also on Amazon's Kindle. You can just type in the title. For those interested in becoming part of our private Slack group where we post live updates day in, day out, you can also just go in and select the subject matter as requesting details for Slack private group on the contact us page. And lastly, check our past records of forecast accuracy, blah, blah, blah. I have a track record of 6 consecutive years, and still we are continuing with the track record, etc., etc. So here is the sequence: crude oil, sorry, euro, crude oil, gold, S&P, and BTC. Now let's begin with the actual content, and let's just first load up the last public webinar so that we can have a quick look. Although, as I just said, we connected a private webinar in the last week's Friday. Basically, that was the date of 28th. So whatever needs to be covered must have been covered there. So there isn't much of a point, but we'll have a very quick look at it anyways, if need arises. So that's about it for our intro. Let's get started. First of all, let's have a very quick look. Maybe we can make some sense out of what do you call so last webinar's discussion and see how it propagated on the live chart. Seemingly, we are looking for tracking a C wave, possibly a diagonal formation. And once complete, we are expecting an up move as per the yellow arrow you can see. And we probably even have a trigger at 1.08617 for this market. Let me just enable the discussion from last webinar title here. So this is a recording from our last webinar. We are just checking out what happened here last to last week discussion. And I guess that's about it. We can now head over to the live chart. So here on screen is the live chart of euro. Let's see. 21st. 15 should do. See, as I said, it's a big gap. Although it is good to see that it did follow the count. Just for reiterating the fact, the blue count is suggesting one more down leg is remaining, as in 4 is still continuing sideways, which will be followed by one more leg for C. C down, excuse me. And then it will go up. And the secondary hypothesis is, or primary hypothesis, it will straight away go up. Or we can ignore all that and just focus on the trigger 1.08617. It seems to have followed dash 2, probably 1.86081617. There it is, 086 something. Go lower, continuing the structure, then up. So it's a +1 from our last week analysis. Marking this as a kind of trade, even if you have watched the public webinar, you would have or should have been able to capture. I personally think we did have some trades on euro. I think long trades. Yes. There were some scalp longs here. I did scalp longs. It's a trade on 2nd of April. Book profit on scalp longs. Yeah. So we did have a trade on euro as well in the meantime, and it was also in plus. So, anyways, that's about it for euros past reminiscing the past, whatever is the right pronunciation. I don't want to get into all that. So now what are we tracking here? We are possibly looking for a move up from here. This is the point of reference or starting point of this analysis. Price level is around 1.07308, and we are looking for a leg up here, correction till here, leg up till here. So we are in an up for an A, down for the B, and up for the C. Maybe it's something else. I think I've taken it currently as a 1 up probably, and a 2 down, and then a dot 1 and probably a dot 2, I think, which can be followed by upward movement. There is no confirmation for it, so it's a wait and watch market. We'll only look for longs above the price level of 1.10696. So basically you can see this high coming around 1.10891. So hopefully you guys are able to hear me and follow through with the conversation. Let me know how are things progressing. I haven't checked the audio at my end. Let me do that. Yes, it's working at my end. So anyways, as I'm saying, we don't have a confirmation if this is going for a nested impulse up with a dot 1 and dot 2, and it will be followed by one more leg up. If that is the case, we have support incoming. Let's see where. Support between 1.0977 and 1.09345. Roughly speaking, that is the level. Keep in mind, we are using this data feed. If you are using a different one, the levels will vary a little bit, right? So that being said, let's call this as our H2 maybe. And another hypothesis, let's just call that one an H1 would be A up, B down. Perhaps the C up is complete here. That's a possible understanding I have for this market, right? That would suggest something completely different. That would suggest that the market is going to go down. So we have two hypotheses. Both do not have confirmation. So we don't have a primary hypothesis. I'm just labeling them H1 and H2 because I have to label them something. And that being said, it's a wait and watch market. We do have a setup for long. For short, we'll probably consider something below this level. And for long above this level. That's about it, I guess. 8.5 something. That's about it. I guess if you have any doubts or questions about this live chat, you can just push them in the live chat right now. Do let me know how is the pace and everything else. Is the screen stuttering? I observed there was a severe lag in the past two webinars. There was stuttering and blurring, not blurring. I think just lagginess. And since then, I have made some technical changes in the setup. Although at my end it does not reflect, it does reflect in the stream. So I don't really know. You let me know. Is the screen working fine, Luis? I think we can just go through the chat at this point in time. Chat. Let's see. There's Manuel, one of our regular viewers, and so is Joe, also in our Slack private group. And of course, Etivat is here. Good evening, Etivat. Luis, one of Etivat is also one of our private Slack group members. Luis, one of our regular YouTube viewers. Good morning to you, Luis. Rhythm is fine so far. I'm not feeling any lag at this time. That's good to know, Joe. Thank you for the confirmation. And Jeffrey, thank you for the confirmation as well. One of our regular viewers. So with that being said, I guess we are done with our discussion on Euro. Let's head over to our next chart, crude oil, which is I think most of you guys are waiting for anyways. Exceptional big moves and exceptional profits. As I did mention at the beginning of the webinar, we had some of the biggest profits this week and all were on crude oil CL. So let's look at what was being said in our last webinar on crude oil. And here I have recording in front of you guys. What do you call the recording from our last discussion? What we are looking at is A up, B down, C up. I guess C up still remaining would be the main view. Yeah, C generally isn't that short. Anyways, this view was I think played out or whatever. Let's just check. Anyways, it was on 21st, so I'm just checking out what was being discussed in the last webinar. Before that, excuse me. Yeah, so the market did go up for the C, and after that it fell. So I don't know what the complete discussion was. Definitely A up, B down is followed by C up, and C just touching the high of A is not the highest probability count. So I would call it a +1. But then again, let's see. Let's just double check it and move on. So it is this hypothesis which is discussed as a yellow count. It's suggesting up move. H2 is suggesting up and then down, I think. And C up is still remaining as per H2. So kind of we had a move where we were discussing up one, so I'll just call it a plus one. Anyways, in the private webinar, we discussed this thing in more detail. So as I mentioned, this is kind of not very useful at this point in time because we had 1 week lag or not lag gap in our public discussions. So I won't emphasize too much on it. I'll just call it a plus one on crude oil because we did discuss the upside scenario, and I want to actually pay emphasis on the crude oil trade rather than the past analysis. Who cares? It's all about money eventually. So crude oil, crude oil, crude oil, crude oil. We are now looking for what is this leg down, which we were able to capture. Okay, that's good to know that Adivat, one of our private Slack group members, was also able to capitalize on the trade. So let's just get started with the actual trade. Why not? Right? Nothing better to explain the markets than the live profits we have made on them. Blah 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 blah. Added minor shorts yesterday. Let's see where and how much. 67.615. Let's note this number down. 67.615 is our short entry. All right, let's see further. Added minor shorts, stop loss, wide stop loss, swing shorts. These are swing shorts. Added scalp shorts today. Let's check the price for scalp entries at 65.687. Keep in mind, scalp entries are supposed to be generally very high in position size, but expected to last a very small amount of time. So we'll just go and check around 1248 and then closed at 101. No, sorry, I did more actually at 101. Closed all scalp shorts and exceptional profit. That was a trade started at 1248 and it at 131. So 42 minutes roughly speaking, 43 minutes, 41 to 43 minutes roughly speaking, we closed the trades and closes around 65.40. Now, why did I take a very small thing like this? Because I have to pay the spreads as well. They aren't coming from thin air. I'm the one paying them, but I played it out nevertheless because this was exceptionally high probability. The direction was strong. The trend was exceptionally strong. And when the probability is very high, that's when you gotta take the risk. You can't just be lying around in safety all your life long. As the saying goes, ships are safest in the harbor, right? But that's not what ships are made for. So that was one of those trades. And as I just mentioned, this was one of the biggest wins in many of the last months, I think. Probably one of the biggest wins in last 2 years as well. So exceptionally big trade. And for this small amount of time, 41 minutes roughly speaking, this was massive. And as I just, oh, it is still on the bottom of the screen. You can see one of our private Slack group members also able to capitalize on it. Hopefully, others were there within this entry as well. If they were, they can always write them in the live chat if they are still here. If they are here, excuse me. Close. And by the way, the swing position was still on, as you can see. And the swing position entry was at 67. Eventually, I moved the stop loss to 64 and then to 63 where the trail was hit. So our swing was also closed in exceptionally big profit at 63. So two entries were taken, scalp shorts and swing shorts. This was a swing short and this was a scalp short. This one lasted 41 minutes. This one lasted obviously longer because this was taken from a swing perspective. Anyways, that was an exceptional big trade on crude oil. And now let's just discuss the actual chart of crude oil and see how things have been progressing. So the count here is I'm taking a nested impulse here. One second. So I'm taking a nested impulse from this point of reference price level is roughly speaking, around 80.64. And we are assuming that we are in a 1-2-1-2 kind of formation. We have one here, a two here, a dot one here, and dot two here, dot here, three heading lower, which is what we caught 67 to 65 something. So sorry, 67 to 63 something. This was a swing. We caught swing short, and between this swing short, there was also a scalp entry, which we caught somewhere within this region. Now, what is happening if this really is the exact count? Then this is heading for a three. It kind of fits all the characteristic traits of a wave three. It is fast. It is not forming much of a gap, but this kind of movement can be considered as a gap. Anyways, I don't want to get into all that price action theory. Just the fact that it is following all the main guidelines, though there is a gap actually here. It is following all the major guidelines for wave three. You can say that this is a one, this is a two, this is a three, this is a four, this is a five. In impulse, as per Elliott's fractal nature, within the five wave patterns, the one, three, and five will have five waves inside of them. So you can say this is the one, this is the two, and so on and so forth. You can get the idea. We can even consider the fact that maybe this dot three is complete. If that is the case, we can see a correction which will be considered dot four, and hence the conclusion that dot five may still be remaining, or one leg down still may be seen on this counter. Right, that remains a plausible fact. We cannot deny it just yet. So what I'm going to do here is just to wait and watch here, move the alert a little bit lower, and probably if the alert hits, I'll check the market again. Right, so there is no set, what do you call, entry level as of yet, because we still are focusing on observing the wave 4. Generally, what we like to do is we observe the 23.6 and 38.2 retracement. As you can see, it has already touched the 23.6, and probably will or will not, we do not know, go for the higher retracement or not. But anyways, we have placed our wave 4. Possibly it could also be considered complete here as well. So we are waiting for some more clarity on the wave 4, and if not, then we can look for possible short entries below 61.21. Although do note that I am not very keen on taking the short entry just yet. I do want to see the market form some more clarity on the wave 4. The hypothesis is this: we have one leg down remaining. That's the main thing. Anytime the market goes and sustains above 65.20 somewhere over here, that's the only time we will say that maybe we are wrong. So plus levels, only above that we look for long setups. Otherwise, there is no point in looking for longs. That's about it for our discussion on crude oil. Let me know if you guys have any doubts or questions. Good evening, Raghu. Let me know any of you guys, Ativad, Jeffrey, Luis, Joe, Manuel, and Raghu. If you have any doubts or questions, if not, just type in clear understood or something so that we can move over to the next chart. Though it is worth pointing out here, the move is exceptionally big. You can see it went from 70 to 60 point something, roughly nearing 10 points. That's a major move in crude oil. And I'm just glad I was on screen, and not just on screen, I was participating in the thing. And that too, I have posted it live. So, one of your live case studies again. Thank you for the confirmation, Raghu. Hopefully, everyone is clear, just like Raghu. And since I'm not seeing any more comments, oh, there it is from Joe. All clear so far. I can't understand how the down move could have been so deep. Well, it's three. That could be any amount of depth it can take. And if you look at the monthly webinar, the private webinar we conducted this last week and the one last month, you will observe that in the higher time frame count on crude oil, I have discussed very clearly that we are in a high time frame sideways movement, and sideways movement we have determined a big range, and within that big range things can happen. That's not much of a thing, right? So just go over all that content and you will be enlightened. Here's Ativat able to capture both swing and scalp in oil. All clear. All right. Thank you for the letting our audience know Etivat is a member of our private Slack group, and given the fact he was able to capture both, that means he is getting some understanding. Hopefully, Etivat, you are also able to understand the point you made in last private webinar where you were mentioning that you are seeing only long only trades. Now that you have captured short trades, obviously your perspective is better, or your understanding of the market is better. Right. With that being said, let's now head over to our next chart without any jibber jabber. Gold. Right. That's good to know. Right. So, anyways, gold. What we want to do is go over the last chart as always, and then we'll head over to the Joe was too late to capture. Well, does happen sometimes, but don't beat yourselves about it. These are the markets, and trades will come. All the trades this certain do not come every other moment, but yeah, you don't have to worry about that. You can still find some better trades, anyways. Right. Anyways, let's now head over and check out our chart of gold from our last discussion, so that we can then head over and see how things have progressed in the current webinar. So here on screen is now the recording from our last discussion, which was conducted publicly on 21st of April 2025. Keep in mind the 28th April webinar was privately held for our Slack private group members. If you want to be a part of that, you can see the details scrolling for that right below on screen. How good is that to see that Atibot was here with us in the last public webinar, stating he caught good points on gold. Hopefully, you are quite rich, right? At least that's what the evidence suggests. Anyways, what are we looking for? We are considering wave 4. Excuse me. And after the completion of wave 4, we are expecting some sort of upward movement here. Let's see what else is being stated here. How is the audio, by the way, guys? Is it clear enough? Or is there some sort of ambient noise or anything bothering you? Anyways, looks like since the price level of 3016, everything looks good. We are expecting bullishness. The second corrective support is 2990. Overall, even here, straight up or correction and up. So we are expecting some upward movement on this. All right, so now let's close this thing and head over to the live chart. On screen here is the live chart of gold. I don't want to discuss the current chart right away. Just want to check the 21st March. So the market went till 3000 something, and then as per the arrow, it has gone up. We have been able to capture the whole thing as per our last discussion. It is funny. Even these old webinars without the context of the private webinar have worked out. So again, a +1. So far, all the discussions, euro, crude oil, gold have all worked out since our last discussion. That is cool. Cool. All right. All right. Now let's check the current count on this counter. So this one had a bit of updates here. I wasn't massively active on this. I mean, and let's see what is the current scenario on this counter. So I was able to capture. Yes, there will be other trades. To capture. Good. Joe, you should always keep that in mind. That's kind of like a mantra you should repeat. Sound is clear, no background noise. That's good. Biggest profit been week since I've been in this group. That's very good of you to have such a profitable week, and that's even better of you to tell us and our audience. That's the kind of thing I like to hear. So Looks like Edward was attentive this week. And yes, there was an earthquake at his place, but he was safe and sound. You have been saved for this trade at least. Not the best joke, I think. But anyways, gold, 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 gold. What we are looking for here is point of reference, incoming price level of 2834. Right from here on, we have an impulsive progression in the upward direction for those new to Elliott Wave theory. And impulse is a five-way progression in the upward direction. We are talking about something like this. Whenever one of these is complete, we look for corrective structure in downward direction. And in this particular case, it has not only worked out, it has also given us the starting phase of the correction. And as you can already see, the market is has dropped to our primary target level of 3030, and the secondary target level is still 3, is open for possible movement to 2945. These are the two main target levels. Roughly somewhere here, roughly somewhere here. Right. Excuse me. So what I'm saying here is that crude oil was supposed to, sorry, gold was supposed to give a downward movement. It has already given the thing, and the public webinar is only supposed to be done at a specific time. Just for the sake of context, here is the post. Here are the posts. Wave 4 updated expectation for wave 4 here. Those targets, etc., determined, and we were at 3089 when we were expecting downward movement, and the target of 3023 whatever was already closed. I was not actively trading gold because the simple fact I was moving money mostly in crude oil and tracking S&P's 500, which was even moving even faster. I think, not I think, I know. So, anyways, that was the those were the trades on gold which I did not have the time for, or what do you call, risk allotment for this week. Probably I could have traded them, but anyways, things outside were more clear outside of gold. So what is really happening? We are looking for possible A down, BF, C down, kind of a zigzag correction here. In Elliott Wave terminologies, you will call this as an A, call this as a B, and then leg down is called a C. So if this really is a zigzag, then C could complete here and the market can just reverse from here. That's, let's just call H1. Secondary possibility is that this whole thing can just be continuing. C can itself go down, it can become complex or something else. It can take multiple different routes basically. But the main point is that the secondary possibility suggests that this market can just propagate within this range, whatever this is, 3164. Downside is 2944. Right, so the market can propagate within this range. It can go straight down, it can go sideways and then down. Why am I not projecting something like a count or something? It was kind of irrelevant here, so I'll just call this as H2. H1 is suggesting straight up, H2 is suggesting first down and then up. So both the possibilities are active. As for gold, we are not interested in longs unless the market takes out the high of 3130. So only longs 3130 plus, and shorts are a little bit tricky. I cannot outline for you a simple short setup right away because there are some complexities that need to be worked out, and those are still in play. So wait and watch market. We do have the long setup. We have already discussed it. Shorts, maybe wait for something like that. But as I said, it can become more complex. It can take on two, three other formations. So we'll just wait and watch for a possible short side movement here on this counter. Nothing much to add on gold here. If you have any doubts or questions, you can just post them in the live chat right now, or else we'll move over to the chart of S&P 500 before heading to the last one, BTC. It is quite late here, and as I just said, it was a very hectic week and day. Everything was hectic, and I would like to definitely take some rest. I don't see any questions, so I'll just head over. Here's a question from Joe. These multiple possibilities for wave 4, but do you think there's a higher probability that the 4 will now end as a zigzag because of wave 2? I don't really think so. Generally, those things can and cannot work. That's just what you call guideline kind of thing, and I personally haven't really checked it as such on gold. And even bigger fact is the fact that gold is has been making new lifetime highs for quite some time. And once that has happened for quite some time, people who have bought in, say here or here or wherever, they will want to book some profits, right? You can't just keep holding something for forever. So when these things happen, there is a possibility that the thing will just do something else. If the profit booking is huge, you may see strong down move. If the profit and deep down move, if it's not so huge, maybe correction. So you have to take a few more considerations. Hence, I will not be considering that guideline for now. Hopefully that clarifies your doubt, Joe. It's still a wait and watch market. Although it's good of you to think of these different angles. Shows the sharpness at your end. That being said, let's now head over to another chart, S&P 500. You're very welcome, Joe. So now let's check what was being discussed in the last webinar on the chart on screen now, S&P 500. Keep in mind, we are discussing the chart from last public webinar. The private webinar, as I just mentioned, is only for select private group members. If you want access to the same, you already know how and where to reach me. Anyways, what am I saying in the last public webinar? What am I saying? What am I saying? So we are suggesting more downside possible for wave 4 followed by wave 5. And this is second possibility suggesting upward movement if that was a ABC correction. So is there anything specified in more detail? Let's just check. I'm not quite able to make sense of all the different hypotheses. Although one thing is clear that below 55.30 we are looking for shorts. Sorry, not for 55.30, whatever this level is, this level. Yes, 55.30, correct. So now let's head over and check the live chart to see how things have progressed since our last discussion. Missed this comment from Raghu. Is it a catching falling cake opportunity S&P by going long now? Well, let's discuss that. Although I do not like to use catching falling knife or cake or anything, but obviously we'll discuss that in a little bit detail. Let's go through that. So first of all, 5530, below that there's a short opportunity from our last discussion. Let's very quickly check that out and close that matter. 21st March, 21st March, 21st March. Here it is, 21st March. Here it is, 21st March. 5530, 5530, 3030. Market did go below 5530 and triggered a sell-off. Although the 4 continued or whatever this is suggesting as. I will not consider it +1 or -1 or anything. Because whatever happened in the middle, etc., we discussed in the private. We must have discussed something in the private webinar, and now it kind of is a little bit pointless to consider it plus or minus or anything at all. So we leave it as 0. Right, let's see the current chart and count. Here is S&P's chart. Let's go to 4 hour. It is already testing our primary bearish count. This was discussed in great detail in our last public private webinar. I mean, and I think even the even in the public one, I was able to discuss it. If not in the last public one, then last to last public one, perhaps. That's not looking good at all. This is not a catch of anything. It's more or less invalidating our bullish count. Our bullish count was what, 1 and 2 and dot 1 and dot 2, and we were assuming another 1 and another 2. But here, if it takes out the low, perhaps even it already has taken out the low, then this whole thing fails and this shifts to super duper bullish bearish count. I mean, sometimes you get lost when doing a shorter time frame analysis. And there's a quote about it, I think. Idiom: can't see the forest for the trees. Too focused on details of a situation that we fail to grasp the bigger picture. Although we did know, we have discussed the high time frame count and everything. I should have marked out that below this it will get invalidated. So a little bit of a surprise kind of thing here. I guess the next level is, even here I'm assuming it as a series of ones and twos. One, two, and we can consider this in 5 for 3. Perhaps. Perhaps this can be taken as a 4, 5. Even in that case, this is suggesting a bearish movement here, which generally wave force will go in the price territory of wave 4 of 1 less degree. Now, this is even more bothersome. It is already there and does not look weak at all. It just keeps getting stronger. So this is not looking good at all. I have no interest in adding longs here whatsoever. That answers your question, Raghu, I believe, because this looks like a suicide attempt here. Obviously, it may turn. Who knows? It may be the turn of the century, but we are not interested at all. Basis of our analysis, it is showing caution everywhere. If it doesn't even hold this level, whatever this is, 5130. Next support is obviously at 4944, but that's not the issue. The issue is that the level being breached and market heading for 4944, which suggests that it's not even a 3-4 maybe, and it is doing completely something else. Right. So it's a cautionary tail market. If you were short, good for you. If you were not short, good for you. Still, I think at least you weren't long, right? Anyways, this is a caution, super caution market. 4944. Do not take any longs whatsoever for now on S&P. In my is my observation for my own trading, of course. If things change, I'll update them in my Slack group and maybe even take trades accordingly. By the way, we were tracking this fall. Where is that? Anyways, I guess you guys may have some more questions, so I'll just wait for you guys to type them in the comment section. There is no long trade here, and as such, for shorts, shorts are only for intraday or scalp kind of situations here. You can't really expect me to take a swing short here, even if the market is going to fall much, much lower. If that is the case, I mean, if even then I won't take any swing shorts here for now. Raghu Joe, at you at Manuel. Luis, hopefully all of you guys are clear. If I don't see any questions in a few moments, I will be heading over to our last chart. All right, no questions here. So let's just now all clear so far. Thank you for the confirmation, Joe. So now let's head over to the next chart of our weekly webinar series. All clear from Raghu as well. That's good. That's good. Now let's have over to BTC. But before that, we should first check out the recording from our last session. So here on screen is the recording from last session of BTC. Let's see what was being said. And by the way, this is the last public session, not the private session. Privately, we held a webinar on 28th February 2025. Sorry, 28th March 2025. A up, B down, C up. What we are seeing here is a possibility of movement in the other direction. Let's see what else we are seeing. 87,200 is plus or long setup. Live chart is now on screen. 21st March. 87,100. So somewhere roughly here. Kind of did not seemingly panned out as expected. Although the fact of the matter remains, this is a complex structure, and as such, I myself have updated many times. Anyways, that possibility being mentioned, now let's head over and check the chart itself. As to what's happening, we are assuming a possibility of a triangle here. Not like that. Maybe there's a possibility of a triangle, and which suggests sideways continuation in this market, which will later be then followed by a possible break lower. So that being said, we have not gotten into any shorts, and we are interested in no such thing at this point in time. As for longs, we are definitely not interested because that's not even in the trend right now. Or trend does not seem to be suggesting that, or price action does not seem to be suggesting that as a possible trend in the coming future, near future. We will probably accept 93, 960 plus something as a alert for possibilities of long here from here. No confirmation means wait and watch market. Many different possibilities possible because it's in a complex formation. Well, that being said, I would say that there isn't really much of anything left here for our discussion. And since I'm not seeing any questions on this webinar, what I like to say is a very small request to you guys. Kindly share this content as much as possible with your friends, colleagues, and in your favorite social media platforms like Discord, etc. As more views allow us to be more creative and conduct more of these webinars and incorporate more of our plans and ideas into the live webinars. So your cooperation is definitely required. probably you can send it to some loved one or an association or something where you are working or etc. That being said, we are done with this webinar, and hopefully you guys enjoyed it. I believe those who stayed till the end sure did. And I believe Ativad sure did, given his exceptionally big profits within this last week. Right? Nothing much to add here. Thank you for staying till the end. And take care. He's saying thank you again for your insight on the markets. You are very welcome, Joe. All right, guys. So take care, and I'll see you guys in the next webinar. You too, Raghu. And same goes for you, Ativat. Bye for now, guys. I'll see you in